Go.
Hello, everybody. A very warm welcome to another edition of our Across Retail Talk. My name is Reinhart Winiwarter. I'm the publisher of Across Magazine, and I'm very pleased that so many people across Europe are here today. A general information up front. 2023 is a very, very special year for Across Magazine. We are celebrating our 15th anniversary this year. Founded in 2008, my publication has developed to one of the leading media platforms for retail and placemaking in Europe. And before we start our discussion, please let me give you the information that we are organizing as a part of our anniversary activities, a very exciting study tour to Lisbon in May. We will visit the most relevant, most interesting, most spectacular retail destinations of the city. And you can find all information regarding the study tour on our website. It would be great if you can join us in May. So back to the discussion. Our today's topic, outlets. Again, outlets. Because we had a very lively and successful discussion on outlets mid of February. And we received so much feedback and questions that we decided to do a follow-up. Yes, and that's what we are doing today. A top-class discussion group is ready. Klaus Striebich will, as usual, lead this discussion as an expert moderator. Please take part in the discussion and ask questions. In the next few days, we will send a summary and a video of this discussion via our newsletter, and also you can find it on our website. So that's it from my side at the beginning. The group is ready. Klaus, the stage is yours.
Thanks, Reinhard, and welcome to everyone to our retail talk in March this year, the second edition of Outlet. It's good to see that there's always something new in our industry. And it's for the very first time that we have a follow-up meeting because the last one was too successful. And it's good to hear that in retail real estate, we have some successful ideas or things are coming up. Yes, I would love to introduce a little bit with something other new, which is I have asked artificial intelligence, ChatGPT, I think you all have used already. And my question was to artificial intelligence, what can shopping centers learn from outlet centers? And it was interesting to read the answer from my chatbot or the artificial intelligence. They say because there are several things that shopping centers can learn from outlet centers, including focus, and it's the first one, focus on the shopping experience. Second, offer a wide variety of brands, attracting a diverse range of tenants and offering a mix of high-end and affordable brands. Third, embrace technology. Maybe we could discuss it with our AI colleague. Fourth, focus on community events, whatever that means, by hosting events that engage your community, which is important. Fifth, emphasize value. So we have to talk about value, whether it's the value for the shopper, the value for the tenant who is operating in the stores, or the value for the real estate industry. And if all three of them have the chance to emphasize value and offering great value for all these guys, then we have, let's say, found our target and our good results. Interesting-wise, all of these topics are customer-oriented, straight from the focus of a customer, and I'm pretty much sure that we will discuss it later on with my top-notch panel round today, and I'm very happy to introduce my panelists. Also, something new. I will start with the ladies first, with the lady. It's Michaela Liegel from Hunkemöller. Welcome, Michaela. Nice having you here. And would you give us a hint what you're doing for Hunkemöller and where you are?
Thank you very much, Klaus. Hello, everybody. Thank you for inviting me to this panel. My name is Michaela Liegel. I'm head of real estate and expansion at Hunkemöller for Central and Eastern Europe. And I'm excited to attend today.
And
Hunkemöller is Europe's fastest growing lingerie brand. We are available in 19 countries. We have roughly 900 stores worldwide, which are not only physical stores, but also digital hubs for our web shops. And they help to realize a very seamless and inspiring omni-channel customer experience. There are around 460, 470 leases under my responsibility. And yeah, of course, lots of shopping centers and outlets amongst them.
Thanks for that. And we are very excited having you with us. And it's good that you represent a brand which is based in shopping malls, on high streets, in outlet centers, or on the web shop or in the e-commerce basis. I think your experience is very valuable for all the people from who are listening. Tim Meyer is with us from CBRE, a former colleague. He has now changed the chairs from operator to an investor's part. Tim, welcome.
Thank you very much, Klaus, and also thanks for having me. As you said, my name is Tim Meyer. I'm working for CBRE Investment Management, and I've been there already for 4 years now. And I'm the head of asset management retail for our retail assets in Austria and in Germany. And please don't confuse CBRE Investment Management with CBRE, because CBRE is doing our asset services such as property management, leasing, and so on. And we are in the CBRE world, the investment arm. And to give you a little feeling about what we are doing in Europe, we have in retail assets roughly 11 billion assets under management. And in Germany and Austria, it's 1.2 billion AUM. And it's a wide variety of retail assets. We have classical shopping centers. We have very specific shopping centers, such as a premium furniture center. And we also have mixed-use assets in our portfolio. And I think what's very interesting about CBRE Investment Management, because we were named just 1.5 years ago, CBRE Global Investors, we have changed that name to underline our aim to be an operational investor. So be very close with our center managers, property managers, also with the tenants, for example, and to underline that we better want to understand our customers.
Thanks for that and welcome. And I'm curious to hear at the end of the session that you have learned something for your assets, which you are managing at the moment. Super to hear. We have Thomas Reichenauer with us, ROS Management, my colleague from the advisory board. He's more or less a partner from the last sessions. Thomas, I think you are the follow-up guy because you have also participated in the last one. Thomas, welcome. And a little intro from your side, please.
Yeah, thanks again for having me again and for the introduction for today. Yeah, I'm one of the 2 co-founders and managing partners of Rouras, Retail Outlet Shopping. We're a pure service provider for designer outlets all over Europe. So we have at the moment 12 designer outlets all over Europe under management in 9 different countries. And we are further developing with new projects, with extensions and so on, and we do a specific part in this niche of outlet centers. We are an independent service provider for various investors, so we have no shares or stakes in projects. We are just developing, leasing, and operating the designer outlets on behalf of different investors like IKEA, Inca, DWS funds, and so on and so on. So this is our role, a niche in the niche, and at the moment we're quite happy with the performance. And yeah, happy to be here again. Thank you for the invitation. It's a great pleasure. For the very first time, a good friend of mine, we met, I think it's now 25 years ago, Joan. You have changed over the chair from a former retailer with your experience now on the chair of an European-wide operating outlet and shopping mall operator. So Joan, welcome, and give the people a little insight who you are and what you're doing.
Okay, thank you. First, thank you for the invitation. It's a big pleasure to be with all of these friends of the sector. I'm Joan from NEINVER. We are the second largest operator in Europe with 21 malls across the markets, including the new project that we are launching in the French Alps. Furthermore, and proud of it, we closed 2022 with brand sales outperforming 2021 levels by 25%, and the first 2 months of 2023 are confirming this positive outlook, which is something impressive and fantastic. And about me, well, more than 20 years on the retail business, or more than too much years on the retail business, I think so, mainly on the retail side, and right now from the last less than 2 years, I'm happy to manage the retail operations and leasing business on NEINVER.
Super. It's super happy having you with us, because your view and your insight and how you will manage it will be extremely interesting for us all. Thanks for that. And also a newbie is my former colleague from the Marpigav jury, is Franck Verschelle from France, Advantail. Franck, very nice to have you with us, and give us also a little insight what you're doing and how France is looking at the moment in our industry.
Thank you, Klaus. Thank you for coming. I started my outlet experience more than 20 years ago with McArthurGlen in France. At that time, McArthurGlen was only in France and UK, so imagine, so it was a long time ago. And I spent some time there. This is where I met Thomas at that time, my ex-colleague. And after a good experience at McArthurGlen, I founded Advantail 15 years ago, same as the Cross magazine, with a clear objective of being a key player of outlet industry in France. Today, we manage 7 outlets in France and 1 in Switzerland from this year. And 2 years ago, in the period of pandemic period, we thought about the strategy of the future with my team, and we decided to develop a management contract also in the full price industry, retail park and commercial center. Because we strongly, and this is the subject of today, that the outlet expertise can bring new competencies, new recipes, new experience into the classic proper management of a commercial center. And I can announce that today we are managing also 7 full price assets in France. So today we manage a total 15 outlets and on the both side. And last point, we are developing also retail leisure parks inside, what indoor and outdoor, close to retail or outlet centers. Well, this is a presentation of Advantail, and so we're present in France and in Switzerland for the time being.
Yeah, super happy to have a wide range of colleagues who are operating European-wide. Super. Let's get started. The outlets. The outlets have a definition, but and it's the start maybe, and the origin and the history of outlets has always been a kind of a stock clearing, which is the so-called origin or the off-price concept. This had led to specific shopping behaviors or a special location. You see it out of town or far away out of town. You see it also in town, maybe. What, from your point of view, and this question is direct to all of you, has changed in the outlet business so far, and what do you think will change in the near future? Are they more close to the city? Are they more close to the other 4 retail formats? What do you think? I would love to start with Thomas, if you allow. What is the biggest difference that has arisen so far?
I think in the early years, outlet centers had been really outside, village style, very clear positioned outside of towns. And I think this had dramatically changed, yeah. So we see it now all over Europe. It becomes closer to cities. Might also become an option for inner cities where you have failed department stores. And one thing I think is very important to understand, that the outlets have one USP. There's clearly the bargains, the excellent brands for good value, but on the other hand, it's an experience, and it's also a marketplace where you find most of the brands on one place in a convenient atmosphere with a good experience. And I think this is something we are all working together on, together with the brands, together with our people, and especially the experience. And we talk about the different KPIs. There is a little bit of a gap between what is the experience for the customer, and then when you see it from the owner perspective, and Tim and others will talk about that, it's a different one. Yeah, want to get good rents, turnover rents, all the different factors which are a little bit different from the outlet to the full price shopping. But again, we feel ourselves as being a kind of retailer, extremely customer centricity, and being partnered with our brand partners to develop further the outlet business, and also learn from the brand partners what their future should look like. I think this is also very important for our business for the future in the next 20 years.
I listened carefully, so you learn from your brand partners. It's an interesting point. We have to come back to that. Michaela, you are representing the retail industry. So if you see the development of outlets, what is, from your point of view, the biggest difference, and what is the advantage compared to other retail formats from your point of view?
First, I would agree to everything what Thomas has said. I would also add that I see some ambitions in the market to pair outlet areas with regular full price shopping centers, for example. And this is interesting to see. I'm not sure if this will be successful, and I'm not sure when this will happen, but there are ideas, and yeah, let's see in which direction this goes. But yeah, and what has changed, I mean, the shopping behavior, you still have those deal hunters which you had in the past. I mean, good deals for shoppers is always the main goal, but there are also an increasing number of visitors who combine an outlet shopping experience with their holiday activities. So I think this has changed. Shopping is, I think, in the meanwhile, and a big part of spending free time, spending holidays, and a lot of designer outlet centers, they have also a huge part of locals who come for their regular shopping to the centers.
Interesting. So we have Juan, who is managing both also shopping malls and outlet centers. What is your point of view, Juan, as from NEINVER side? Is there still any difference?
Absolutely. I think I would say that the big difference in the B2B side is the relationship between the partner and the landlord on the day-to-day operation, being much more close than full price. As part of the success formula, I think how is structured our business? We have to use much more sophisticated management techniques due to the analysis of the status and the potential of requests are completely different, absolutely 100% different, because as close as we are of our partners, our tenants, our brands, a best decision, a faster decision we take, and this is affecting directly to the sales and obviously affecting to the final rents that we are collecting. But for me, the big difference, and to finish, is that we are not waiting the day one of each month to collect the rent. This doesn't exist anymore. We are on the opposite side. We need to support our brands, and that's the formula. That's the only formula, first of all.
And should there be a difference in the near future, or should the gap somehow bridged? Frank, what do you think? You have the same discussion with your assets, I think.
Yeah. The difference between managing a full price or an outlet is, I would say, at the basis, it's totally different. I mean, and this is what we decided to go into that business, because we believe that we can apply some recipes. However, I mean, something specific to the outlet business is the structure and the financial condition. We have a specific lease in the outlet, especially with the lower rent, but more turnover rent. We can charge more marketing or service charge cost because we employ a full team on site, and we have a lease to sign where it's a more cooperative lease with retailers, and they trust us by giving more information. We'll come back on that for sure on the weekly sales turnover and KPIs retail we collect from our tenants. Okay. Second point is on-site management. I can compare, because by taking over some new contracts in retail, sometimes you have 1 day presence of a center manager on a week, or 2 days. Imagine 2 days or one day of presence in a week. Whereas in outlet, we have a full team on site, so we can manage very closely the relationship with our tenants. We can work with the local communities with a full-time marketing employees. Okay, the approach is totally different. It's a collaborative approach. We have same as Juan said, collaborative approach with our retailers we have. For instance, also in the outlet, we manage the trade marketing plan. Whereas in the full asset, full retail asset, okay, every retailer is doing his retail plan. In outlet, we control in a way by proposing a common trade marketing plan, and it's more efficient when we have to communicate. And I'm sure later, but I won't spend too much time on that. It is a retail management we do in a center that makes a difference.
We will come back to that, I'm pretty sure. Tim, if you listen to that, the differences, so-called differences, wouldn't it be nice to invest more in outlet, because they're much more active, much more collaborative. They are catching up higher turnover rents, which is always a target. Tim, what you're the investor in that investment, more outlet center or more shopping center tomorrow? What's your point of view?
Well, first of all, I really admire the structure that can be seen all across Europe in outlet centers, because I just had a tenant meeting yesterday with one big German tenant who is almost in all of our assets. And when we started the negotiation yesterday, the first point that was mentioned was the rental level. And as we heard now from everybody who spoke before, this should not be the focus. And I don't blame the tenant. You know, this comes from history, where we as a landlord, as an investor, had the biggest focus on rental income, service charge income, non-recoverables, collection rate. And these are all factors where we obviously want the most of, and the tenant wants the least of. And in my opinion, this creates somehow a competitive atmosphere, a competitive environment that we really need to get rid of. We more jointly have to take a look at retail KPIs such as footfall development, at the customer. And I also really admire several initiatives that can be seen in outlet centers, like loyalty app, where the management company and tenants work very closely together on understanding the customer. And I think this is key, because if you manage those KPIs correctly, then the financial KPIs come irrelevant, because as we have heard it already, then turnover flows and you participate from turnover rent. And that's what I really admire. And that's why I would also love to invest in an outlet center, just to learn much more about it. We have already been in close contact with several center managers, property managers, and outlet owners to learn from this. But in my opinion, this is where full price retail has to go. And outlet centers are probably 5 to 10 years ahead of us in understanding the customer, and in that sense, to be much more successful.
I love this kind of view, and the headline tomorrow is Reinhart, CBRE Global versus invest in retail assets much more than in the past. I try to unhide a secret, to be honest. Maybe that leads to a deeper discussion. What I heard, because I'm not an outlet operator, that the average rental level is much higher than in shopping malls, and the average extra charges are much higher than in shopping malls. Funny-wise, there's no real claims about that levels. If you listen to the discussion amongst, let's say, the classical retail formats, there's lots of claims and problems. But if they discuss the extras and the rental level in an outlet center, it's much lower. Thomas, do you agree on what I'm saying?
Well, I agree, and it's not that we make this quote. I think it's done by the brand partners themselves, because we see in the outlets center much lower vacancy level. We see a lot of prolongation on contracts at the moment after the pandemic, which are on the same level as before, or even higher in most of the cases. So I think there's a mutual agreement that if you want to get premium service in an outlet center from the operators as a brand partner and as a customer, the brands are ready to pay for it. And as Frank already mentioned, there's a clear goal of the year. There's annual planning. All the promotions are planned together. We also, in a way, listen what are the main focuses of the brand partners in specific times. And I think this mutual agreement that we both have to deliver excellence in the stores, that means when we, coming to the stores, working together in business review meetings on the visual merchandising, on the staffing, on trainings for the staff, on all these together in the center, it's a common approach to the customer. And I think these bind together. Also the interaction, as it was mentioned, loyalty programs, all what's going on in the social medias. We need our brand partners to make good promotions on Instagram, on Facebook, on all these in normal promotions. So that benefits everybody. Yeah? And I think this is a way forward. And this also helps us during the pandemic, when we see now when a lot of things had been online purchased, that people are coming back because they want to have this specific experience and this customer experience, which can be now, there are various quotes, and we're also working with various techniques. How can we measure customer satisfaction, customer experience? Maybe we talk about that later. But I said again, most of the outlet centers in Europe are fully leased. A lot of extension are happening at the moment. So that shows that the concept on a professional level works. And I think this is something which is done by daily hard partnership and nitty-gritty work. There is no miracle behind it. It's just hard work every day from the center teams and from each and everybody in that business.
Super. Michaela, Frank, you want to add something?
Yeah. In my career, I never had a meeting with a retailer who told me I want to increase my rent or my charges. Never. So everything is related to one was at the opposite knows that. Okay, so it's always the same issue. It's not a question of rent. It's a question of OCR, occupancy rate. Okay, the level of rent and charges. And I'm facing difficulties today with my second part of my business, the full price, to convince the investor, because I tell them the best way to increase the rent is to increase the turnover performance of your retailers. And the best way to decrease the risk of bad debt is to decrease the OCR. So this at the end is the same. Okay, let's talk about OCR. Inside you have the charges, you have a marketing service charge and the tax also, but also the rent. And in the meantime, the retailers, they like the numbers. Retailers like number 10. In their P&L, they want 10% of staff in their P&L, and they want rent and charges up to 10%. So, and I think with an outlet approach, we can try to reach this 10% OCR. Not by decreasing the rent or by decreasing the charges, by improving their sales. This is what Thomas was saying.
Yeah, super. I would love to ask Michaela, as the representative from the retail side. First of all, the first question would be, are you happy with these all collaborative activities they have to increase the sales? And the second one, is that the reason why retailers do not claim that much about the rental or the extra charges level because of that? What is your view?
My view is that on the bottom line, outlet stores, especially the designer outlet centers, they are usually highly profitable, despite the comparatively high costs and restrictions and fees they have with retailers. So in the end, they are very professional, managed, fine-tuned sales machines, which on top do a lot for our brand awareness as a retailer. So if you are in a DOC, it's the confirmation that you are a very popular brand in the end, right? So, and as long as they are very profitable, nobody will complain about the fees. And on top of that, we also see where these fees are going. Compared to a full price shopping center, I do not know what they do with a promotion fee. I simply do not know it. And I can't see it. On the other side, if you have a outlet, you can see all the social media activities they are doing. They have shopping centers normally have very poorly managed social media accounts on Facebook, and so they are not very attractive. You get more the impression that somebody is doing that part-time and writing some posts. Oh, and this is totally different in outlets. They are very keen on pushing, and they are very active and very agile. And this is the main difference. On top comes that nearly every contact person in the outlet industry has a retail mindset and not a real estate mindset. Of course, they have to look on their rents, but mainly they have a retail mindset. They speak retail and not real estate. And this for me as a retailer is the main difference.
I love this. I love this kind of, let's say, approach, because it sounds somewhat unusual in our industry at the moment. We have high sales, we have high rents, we have high extras, and we have a profitability. So that seems that everybody's happy about it. The question is how to manage, because everything is high. Maybe also the workload is high to achieve that kind of goals. Juan, what has to be done to achieve that high levels? What are you doing throughout the day to make retailers like Michaela happy and that they are profitable?
Well, the first thing is understanding that rental incomes are a consequence, not the cause of the business. This is Michaela has to sell, someone has to come to the store of Michaela, and then the consequence of the end of everything is the rental income that she will pay us. Okay, and I have to say that our strategy is based in 3 pillars, 3 basic pillars. The speed to take decisions, how proactive we can be, understanding the trends of the market. Obviously, decisions fact-based. You know, we cannot work without facts and analytics. The second point is be close to our partners, understanding what are their needs and how we can help them on this channel business, because we are not the last option anymore. There are some brands that are just opening outlets to develop their retail business. Okay, and as I think the last point is the alignment to support their strategy, the global strategy, especially on the brand awareness, because at the end, outlet business is not the, let's say, the dark of this of the retail business. If probably one of the most useful tools to have a brand awareness within a market. And with these 3 pillars, I think brands are trusting in what we are doing.
Super. Frank, anything to add?
No, yes, always something to add. No, I would say, and coming back to what Michaela said, what Outlet has been successful in the last 20 years is to create a very close communication with tenants, with retailers. We speak the same languages. The retailers talk to retailers. We are retailers. We are for sure from real estate industry. We are operators, asset managers, property managers. But at the end, we are retailers. And all the team hired in the outlet, most of them comes from the retail industry. Look at, well, the best example. Because when you are retailers, you can speak to retailers and find a common solution on some problematic sometime. And so this is what I'm saying. I mean, education is a key word in the retail industry today, because we need to understand the financial terms of an investor. We need to understand the retail KPIs of the retailers. And if we do both, we can speak a common language of the retail, and it's easy to work with.
It's always good if the one understands the others, and that it is not just listening or speaking, and that the news or the message is understood and receivable. We have already received a question from the audience, and this is my call to the audience also to write more and to send more questions. But this question is directed to Michaela and Tim, because the one is interested to hear once more whether, for example, Michaela and Tim agrees that full price high street shopping sectors really can learn not only from regarding lease structures, but also from a management approach compared to the outlet business. Michaela, what do you think? What could you learn? What could be learned?
Well, Yes, I mean, as already said, it's more about focusing on the tenant's needs. And I think it starts with the knowledge between the landlord and the tenant that we both are sitting in one boat. So, and as already said somebody earlier, the rent which is coming out of that business for the landlord is the consequence. But the first thing is that somebody's coming to Hunkemöller and buying something. So in the end, the tenant should be the focus. And I think that the landlords need to focus more on the tenants and the tenants' needs, because it all starts with somebody buying things in our store. That's it. And if you have this in mind, there are several consequences regarding the lease structure, the management, so many different sectors which can be considered, but it all starts with the mindset that this is retail business. And if you want to handle bricks, then maybe retail business and retail real estate is not the right business for you.
Interesting. Tim, have you already learned something for your full price assets? Or what do you think could you transfer from today's lesson or from the outlet business to your assets, your retail real estate assets?
I think the main challenge is that there has to be a mindset change in the complete structure of investment. So, for example, we have our own funds that we set up where mainly pension funds invested, churches invested, insurance companies invested, and those are very conservative companies. And we are always very dependent on independent valuers who take a look at our assets and say that from a financial perspective, everything is fine, so they can tick the box. And one of the main challenges is that turnover rent is seen as a very high risk. And that's where they punish us in the value of an asset. And then on the other hand, when our investors see this, obviously they feel a little insecure about retail assets. So there has to be a lot done in the change of the mindset. And that's why it's very good, in my opinion, that we have such a discussion today, because I hope there are many parties involved and listen to this, where we hear what the tenants' needs are, the property management, center management needs, the investment needs. So yeah, what I learned mainly is to communicate much more to the outside world what needs to be done to be able to focus on retail on the long term, because several factors that we have to deal with currently are not very good for the long term.
Super. Is it at the moment your job more to inform and convince them, or to hold their hands, to let them understand what they have invested in? Or what would you think will be your job at the moment?
Yeah, absolutely. Key is communication, not only to our investors, but for example, when we have loans on our centers, the external parties, the banks, they require, which is also a new development. Usually they have become like a yearly statement. Nowadays we have quarterly meetings where we also explain the necessity of, for example, turnover rents. Because today, also in full price retail, I mean, I will not tell you a secret, we have very good fashion retailers in the industry that only come into a center when you give them a pure turnover rent. And this is something that we have to consider if you want the attractive brands that bring footfall to the asset, that also have a positive effect on the rest of the center, of the other tenants, then you need to become more flexible.
Super, absolutely. We should start talking about numbers, because one of the questions from the audience was also what is a healthy OCR for an outlet, or a special thing? But I think that's not easy to be answered because there's a wide variety. Is there a healthy OCR? I think, Michaela, lower than higher, right?
Yes, I mean, for us, it's another KPI is relevant, and this is the EBITDA. So, I mean, you always have to care on the cost side, also on our side, but also the landlords. And as long as you have it in a good range, in a healthy range, I think in a shopping center, for example, in Metzingen, it's a different number than it is on a factory outlet center out of town. So it's very difficult to give you a bare number, but the EBITDA for us in a store needs to be profitable. So and that's it. And the better it is for us. So that's it.
Independent from the rental or the extra level. So for those one who doesn't know, OCR is occupancy cost ratio, who is not handling the numbers. But let's talk about KPIs, because in our industry, we are still KPI driven. The major problem is we have different views. We have the real estate KPIs. And of course, we have also retail KPIs. We talked about it last time. Thomas will remember. If you make a kind of, let's say, comparison, Thomas, the difference between real estate KPIs and retail KPIs, what would you love to figure out is the most important from both point of views? And could we combine it somehow?
Well, I think it's a necessity to combine it, yeah, because at the end, there is a kind of investment who wants to get their return on the invested capital. What we have to say is, and I think this is a key success also for the outlet business, to have the right owners, landlords, investors, whatever call it, that understand the business. And Tim already mentioned it before, to understand that turnover rent, and this is something which really drives the business. And we have also this ratchet clause in the contract, yeah, that the last turnover rent then becomes the base rent, and so on and so on. And that's not easy to explain to banks or to investors, but I think this is key, so that also the investor understands the retail KPIs we are working. So we're working with all UPDs, ASPV, ATV, footfall, conversion rate. All that is part of the daily work that we have together with our brand partners. That's the one thing. But also on the investor side, it's an understandable thing that what is the potential of an outlet center also, yeah? So when we work together also in our budget meetings and so on, we have to explain what are we focused on. And this is also something, where do we need money? Do we need money for, I don't know, CapEx money on now ESG topics to make the center fit for the future? Is it something in marketing? Is it something new in the social media? What do the brands give us feedback? What are their KPIs at the moment? It's also important that we aligned on the retail KPIs with our brand partners, yeah? It doesn't make any sense if one of a brand, let's say a large brand, a very important brand, says our next year internal, KPIs, we want to increase our profit. But the other one is maybe to sell more items because of internal topics. So this needs to be aligned. And I think the most important thing for me is at the end, to make all that a success, is in a way how to measure success is how satisfied is our end customer, our visitors that came daily, how high is the conversion rate coming from the visitors, make them to customers. It's very high in the outlet business, clear. But we also have to combine this in a way and look success as a kind of a measurement, let's say experience divided by square meters or something like that for the end customer, because we forget here a little bit the end customer, who at the end is paying the bills of all of us.
Mm-hmm. So therefore, shouldn't we invent a new KPI, so key performance indicator? I would love to invent a kind of a KPI which is called customer performance indicator, because that's the beginning of our story, what we have already figured out. So that means we have to follow the customer's needs, so to buy a bra or to buy some, let's say, some other stuff, and that leads to sales turnover and also lead at the very end to a positive EBITDA, whatever it is. Frank, if you now have to discuss a CPI, a customer performance index, with your clients, means your investors and your retailers, how would you manage that?
Ooh, it's a difficult question, because if you talk to investors who are specialized in outlet, okay, they understand the KPIs in retail, so they can understand the KPIs for customers. But at the end, the best ratio for customer satisfaction is the footfall and the fact that buying in our shops, in the retailer shops. So there are already some customers in index, I think. And we on internet we follow closely the different media, but at the end the customer satisfaction also depends on the satisfaction of their trip in the center and the purchase of the store. And this is what I mean, communication with the retailers because they have data, specific data also in the store. They monitor, same as we do, we monitor some KPIs, they do monitor the satisfaction of their customers. And this by exchanging these, we don't have to reinvent a new KPIs. I mean, retailers have got KPIs, customer satisfaction. We just have to exchange again these KPIs.
Okay, Juan, do you think we should, let's say, have a new priority in the so-called KPIs? So because we have so many, and it sounds like a huge of workload, would you change your model in reports, in your reports, with other KPIs you're using in the near future to make it happen or to make it successful?
In fact, we are on the process on it, that we are trying to understand our malls as an store. Probably this is because my retailer track record, and then trying to be aligned with our partners. Clearly, why Hunkemöller is opening a store, because they are looking for the new consumers. Okay, what is our job or role here? To attract new consumers, to attract loyal consumers for each brand. Then there is no option. Even you probably be the Elon Musk of the new KPI, Klaus, but there is no option to be aligned with the consumer as the first, I don't want to say KPI, but the first objective of everyone. Sage people, probably one of my first words says that as much, and probably retailers has listened to this a lot of time before, that as much as the consumer are in the store, as much possibilities to buy, right? It's exactly the same for a shopping mall, and it's the only way. Let's say, I think, as Frank says, everything is embedded, and we need to use the tools that we have on the table. But obviously, there are new performance indicators by far.
That's good. We have a very nice input from the audience, and they was writing because they say the new KPI definition is now keep people interested. I think I love it. A very nice input. Thanks for that from the outside. And there's an addition to that, just go for the NPS, the so-called Net Promoter Score, which is also a nice KPI, which has to do at the very beginning with the shopper. Frank, something you would use, or Michaela, for your work? Frank first.
We definitely use the NPS on every center, for sure. It's already part of our KPIs portfolio. But something I would like on KPIs, it's good to have financial KPIs. ESG KPIs now is coming strongly. We have to monitor that. Retail KPIs, customer KPIs. At the end, you need people, you need your staff trained to understand these KPIs. And so it's good to have a lot of KPIs everywhere on your screen, but at the end, you have to understand how to monitor, how to collect, how to discuss with the retailers these KPIs or your customers. So education, and we need to have multi-education people in our industry, not only retail, not only real estate, not only a customer or marketing oriented. We need to understand the different KPIs and try to play with that. Yeah.
Michaela, what do you think? What do you love? Are you happy with this kind of discussion of setting up a new KPI list?
Totally, because Hunkemöller is totally KPI driven. So I would love to add some more. But to be honest, I mean, the footfall is everything, right? And the visitors. And also for our stores, and then it's our turn to turn the visitors into customers. And but I even consider this development to be urgently needed in the retail real estate industry, because I'm a bit concerned that if shopping managers and investors continue to work past the retailer in this area, it is possible that in 10 years, we will see a number of shopping centers where probably Galleria is today. So I think we need to improve the situation tremendously, and we need more data, and we need more also responsibility for shopping center managers. How many visitors do they have? They do not at the moment. I mean, it disappoints me every year, but I don't see any sharing or exchange of data. How many visitors do they have? Did they lost? How many have they lost? Why did they lost? There is no analysis in this part, and it's very disappointing for a very technology data-driven retailer like Hunkemöller is to get no info on this. And I mean, we do a lot to get the people back to the stores. I mean, I said in my introduction that Hunkemöller uses the stores also as digital hubs. We try to get the customer back into the store. We waive the delivery fees when they buy something in our online shop. So we say to them, okay, pick it up in the store. Maybe it's easier for you. And we waive the delivery fee. So, I mean, this is a very stupid and very small measure, but it can bring a lot in the end.
Absolutely. So it sounds that there should be a kind of openness, an information flow, which should be a little bit more than it is today. On the other side, it sounds still that it is a lot of workload to be done. Tim, if you see that and all that requests from retailers and the operators market, this workload which appears somehow, and I think we could not avoid it because in these days we have to work a little bit more to be successful. How could you manage it from an investor point of view? What could you, let's say, do to make this happen between retailers, the operators, and you as the investor?
Well, maybe one statement before. I think the main challenge for investors is that retail is considered now with lots of insecurity. Because the whole retail landscape has changed during the last years so much. Klaus, you've mentioned in the introduction that we both have an ECE background, and in 2010, when I became a center manager, I was joining the center management trainee program. And just to give you a little insight on how fast this environment has changed, we have from the leasing perspective, we have learned about the 10 holy cows. And Klaus, you will remember that. And the 10 holy cows, just to give you a few examples, number one was each leasing contract needs the duration of 10 years. Number two, each leasing contract cannot have a special termination right. Each leasing contract cannot entail any fit-out contribution. And we have slaughtered those holy cows, all of them, during the last years. And that's why for investors, so much has changed, and especially as Michaela said, when you do not come from the retail side, it's very difficult for real estate people to adjust. I think we have done already a lot, same as we have seen in outlet centers. So many retailers go to the real estate side and support investors on this. And the main issue will be to continue to exchange those kind of KPIs and show what is really relevant, because for now, I would say for the majority of investors, most relevant is still rental income, but we need to change this rather to how to keep people interested, for example, as we've seen this in the chat box. And that's, Klaus, in my opinion, where we need to work most on, change those KPIs and focus much more on the customer and on the collaboration with the tenants.
We are not at the end of the session, Tim, which sounds like a good final statement, but it's very fantastic. It's very fantastic words. And Reinhard, you have listened for the report tomorrow. We have some special questions to our panel here. I would love to raise them before we have to come to an end because it's just 6 minutes to go. There was one question from the audience. They asked, what are the biggest trends in outlet centers in terms of technology? For example, retail media, self-checkout, digital labeling, digital engagement, tracking, blah, blah. A question directed to our operators. Thomas, what kind of, let's say, trend would you figure out? 1, 2, 3.
Well, first of all, there is loyalty programs in whatever form. I don't want to dig into that now because it is a topic for a session in itself. So loyalty programs we show, and that's easy to evaluate that whenever you do whatever loyalty programs, brings customers back and higher spend and higher purchase power. Second thing, I think the marketing money as a marketing budget of the centers are shifting dramatically, had shifted and are ongoing shifting into much more into digital, social media, digital, and so on and so on. So this is happening a lot, yeah. And the third thing, I think, is again customer experience on site. So it's a clear goal from us to say we want to bring the people in the center. Yeah, there might be some, you know, click and collect and so on and so on, but the clear goal is at the end to bring, with all the activities, with all the programs, the people back in the center and to create a kind of a wow effect. Yeah, it should be an experience. It also should be something extremely special when you go to such a designer outlet and say, wow, I'm really impressed, either from the brands, the experience, maybe a great present, a coffee, whatever, yeah, that this is the best advertising. The word of mouth is still, I think, the key element at the end to bring the people back.
So digitalization as a support to bring back people into the mall or the outlet. Frank, what would you love to add?
No, nothing more. I mean, the digital experience, but also customer experience on site is, as Thomas said, are keywords for today and tomorrow in the outlet business. Yeah, for sure.
And Joan, what do you think are the major trends in the outlet centers?
I want to add about this digitalization that data and technology accurated are super important on that. We are investing a lot of that, just tracking how our customers are moving, how they are purchasing, how they are going store by store. That's, I think, as much info as we have, as much data we can analyze, as much options we have to understand how is our target and how we can provide business to our partners. I think it's just adding what Thomas says, absolutely. But for us, it's also important, this part of the digital business.
Super, thanks for that. It's unbelievable, my dear panelists, but we are very close to the end already, and I have thousands of more questions, but we have to do our final round. So I will start with Tim, because he has already somehow started with a final statement. Tim, if you would love to give 3 commendations, my most favorite question at the very end, 3 commendations to our industry, what will be your 3 commendations for today's session?
Yeah, number one, what I've touched already before is that we need to focus on the catchment area and the people who live there and try to understand what moves them to our assets. That's number one, focus on the people. Number 2 is partnership with the tenants, much stronger collaboration, much stronger exchange on strategies, also on their knowledge about the customer. That's number 2. And number 3 is, from our investors' point of view, we need to get used to the fact that all holy cows have been slaughtered, and we need to become more flexible.
Super, thanks for that. Thomas, your outcome and your accommodations?
Well, first of all, I think we're just very brief. I think it's very, very important also that one of the key elements of our business to take care of our team members, of our staff, develop and further support our team members and teams on site. So I mean, from the stores to the cleaning, security, so all that works in the field of the outlet center. I think this is something we have to take much more care of it. The second is we should definitely stick to our USP in the outlet business, even if others might learn from that, but we should be clear and very precise what is the USP of the outlet business. The third thing is, in these difficult environments, I would say we should stay just positive, bold, brave, and innovative. So we're having a great business. We just need to further be innovative on that. But, you know, retail is always something which is moving on. So I think just be brave and innovative, and that will be the success key for the future.
Frank, what's your
point? First point would be more collaboration with our customers and tenants, especially in the full price industry, where it's clearly lacking. More exchange of data, of KPIs and customer bases, database, Michaela, because sometimes the tenants keep their database internal. We have to exchange it. Okay. The second is really to combine the real estate expertise and the retail expertise among our teams, because, okay, we need to speak the same language. So we have to learn from each other because the KPIs are different. And at Advantail, we're trying to learn from our asset manager, but also from the retailers, which is important. Third point, retailers, investors, property managers, at the end, we have a common and crucial client to serve, the final customers. it's like kind of a funnel. You see, for years, the retail industry or the real estate industry work together without thinking of the end user. Now we have to reverse it and reverse the funnel. Okay, we have to serve the client first. Okay, and an extra point, I really convinced that FOC managers are excellent operators for managing full price assets.
Okay, I think many people have listened to that. Joan, do you have to add something, or is everything said? No.
Very difficult, very fast. Just to say something, because I'm totally agree with what you have said, is that although the current strengthness of our business, we have too much homework to do using our kind of relationship between all parts involved. And I want to say that we have an enormous potential to growth. And because there are many options to do, include leisure, include and a stronger F&B, as we have done in some of our malls, e-commerce, etc. And I'm expecting that outlet business be at the same level of the seasonal business in a short-term period.
Sounds good. Michaela, we have started with you, and it's your honor to give the final statement.
Well, all my points were already mentioned, so I have nothing new to add. So I will close it by saying that we are all working in the retail real estate business, and I would say that this is the most amazing part of real estate, and I would love to see landlords and asset managers and contact persons that are more passionate for what they are doing. So I would love to see that they develop a brand with their properties and their shopping centers and their outlets. And this needs to be the goal, because this will be an answer on the question, why should the customer go there?
Fantastic. I think you have represented with this panel a kind of a passion for our industry. I know how you feel, but I have a good feeling. I have learned a lot, and I'm pretty much sure that the difference between outlets and all the other retail formats will not be longer that big. So please stay tuned. And Reinhart, it's now up to you to give a final statement. And I have to thank very much to all of you and to our audience who have listened.
Yeah, wow. What should I say? It was, again, a really great and brilliant outlet discussion. Many thanks from my side. It was extremely exciting, informative, and entertaining. And thank you all of you, because we have a lot of valuable inputs and ideas for our editorial work. Thank you. And as mentioned at the beginning, we will send a summary in the next days, both text and a video. Many thanks to my panelists, and yeah, many thanks for watching. And we hope really to see you again soon at another Across Retail Talk. Thank you, and goodbye. Goodbye.
Enjoy. See you soon.
Thank you.
Bye-bye.
Bye.
Bye.